Hi and Assalamualaikum. Today our group 7 will be presenting our assignment regarding to financial analysis according to the company that we have chosen. So this is our team members. The first one is Nurin Farahanis binti Muhammad Nizam with metric number 297643. Next, Nuliana Akila binti Muhammad Azhar 303424. Next, Nurin Shamila binti Muhammad Syari 303405. Next, Lee Ching Chin 305174. And the last one is Sharifah Haidarina binti Said Haiza 303393.
The 5 companies that we'll be representing includes My News Holding Berhad, Timberware Berhad, Watai Industry Berhad, Axiata, and Hussein.
So today, I will be presenting my financial management analysis on My News Holdings Berhad, which is one of Malaysia's leading convenience store brands. So let me begin with the company's background. My News Holdings Berhad, known as a homegrown retail brand that has achieved consistent growth, strategic partnership, and vertical integration. Its expansion into food manufacturing and collaboration with global brands highlights strong potential for long-term sustainability and innovation in Malaysia's evolving convenience retail market. So let's move to the strength of the company. One of My News' biggest strength is My News is a leading Malaysian convenience store chain with 530 outlets, which is known for strong branding, reputations, and nationwide presence. Other than that, its partnership with WH Smith, Gourmet Kinaya, and Rio Yupan enhance product quality and credibility, which is giving it a competitive edge in both retail and food service markets. Now, let's move on to common size analysis. From the balance sheet, we can see that there was an increase in inventory as a percentage of total assets. It is because the company might be preparing for higher sales, in which case the ratio can be used positively or lower sales. Alternatively, it could mean slower inventory turnover. In case the stock is not well managed, it can also tie up cash in stock to a higher percentage. So now, let's move on to common size analysis. From the balance sheet, we can see that there was an increase in inventory from 14.5% in 2023 to 60% in 2024. It is because the company might be preparing for higher sales, in which case the ratio can be used positively or lower sales. Alternatively, it could mean slower inventory turnover. In case the stock is not well managed, it can also tie up cash in stock to a higher percentage. By looking at the income statement, the share of profit from joint ventures increased from 0.3% of revenue in 2023 to 0.4% in 2024. This might look like a small change, but it actually reflects greater profitability from My New strategic partnerships. These profits come from joint ventures with companies like WH Smith and Japanese fruit producers. The increase suggests that these partnerships are becoming more successful and contributing more significant to the company earnings.
Now moving on to Axiata Group Berhad, which is a leading digital and telecommunication company based in Kuala Lumpur, Malaysia. Originally part of Telekom Malaysia in 1992, it rebranded as Axiata in 2008 following its regional expansion. For the strength, Axiata has a strong regional presence across Asia, serving over 160 million customers in markets like Malaysia, Indonesia, Bangladesh, Sri Lanka, and Cambodia. This wide reach gives Axiata a strategic edge, such as lower cost, diverse income, and less reliance on any single market. Now, moving on to Axiata's common size analysis, I examined 2 components: borrowings from the balance sheet and marketing, advertisement, and promotion costs from the income statement. Borrowings, as you can see from the graph, it decreased from 28.27% in 2023 to 24.89% in 2024, which typically signals that the company is managing its debt more efficiently, possibly improving its financial stability. On the marketing side, costs fell from 8.06% to 6.88%. This could suggest more targeted, cost-effective campaigns, a shift to digital platforms, or a broader effort to cut operational expenses. Either way, both trends reflect a move toward greater financial discipline.
So here we have Timberwell Berhad, where their background would be implementing the group's timber harvesting and forest renewal activities. So they follow the plan approved by Sabah Forestry Department and strictly follows the rules of sustainable forest management in the industry. Their strengths would be that they're very well known, so they're able to demand a higher price than other companies in the field. As you can see from the trade and other payables graph, the numbers has increased from 2023 to 2024, mainly because this indicates higher outstanding payments to their suppliers and creditors, which doesn't really look quite good. However, when looking to the total comprehensive loss for the financial year, it has significantly decreased, which is a good sign, but they're still at a loss during 2024.
Next is Watai Industry Berhad that began in 1962 and is now a leading biscuit maker in Malaysia. It started with traditional snacks and later expanded its product. They were operated in Kelang and its biscuits are sold in over 60 countries. The company now focuses on quality, new technology and packaging to gain customer trust. So we're moving on to strength. Since Watai already operated in 1962, Watai has achieved a recognizable brand name, sending goods to over 60 countries and lessening their dependence on single industry and halal certification and efficient production to ensure that companies' goods appeal to people all around the world. So moving on to what the industry Berhad common size analysis, I take 2 things, one from balance sheet and one from income statement. So as you can see from balance sheet, trade and other receivable has increased from 33.84% to 39.76%, that indicated to higher credit sales or slower collection. From income statement, I take from selling and distribution costs has reduced from 18.39% to 70.76%, that indicated to more efficient sales or distribution.
My name is Ching Ching and my matrix number is 305174, and today I want to present about the company that I picked, which is Hubsen. Hubsen is a company which is established on 4th of October 1991, and it was a company which is focused on producing crackers and biscuits, and it will distribute to other factories and other like manufacturing tradings on those food industry. And then for the strengths of Hapseng, which is Hapseng have a strong brand recognition, and they got an award by the Brand Loretta Special Edition Awards, which is organized by Asia Pacific. And for Hapseng also have a consistent product quality and taste, because they want to make sure that they have a strict control and measurable to make sure that every customer which purchase their food have the same taste and quality when they eat. Now I would like to present about short-term solvency. The first one is current ratio. Timberwell has the highest current ratio in this 5 company, so they have 2.25, which is they have the highest ability to cover their short-term liability. And then the lowest company is Axiata. They only have 0.64, which is they don't have the big ability to cover the short-term liability. But for Huatai, Hapseng, they have the average current ratio to cover their short-term liability. And then for my news, they can't cover their short-term liability, but it was better than Axiata.
So for long-term solvency, debt equity ratio equal to debt divided by equity. As you can see from the graph, Huatai had the highest financial leverage in 2024 with a debt equity ratio of 2.75%, which showed it was highly dependent on borrowed money. Meanwhile, Timberwell had the lowest ratio of 0.20%, making it prominent for its small use of debt and little risk. From the graph, in 2024, Huatai had an equity multiplier of 3.75%, which reflects using the most financial leverage of all acquired assets. Meanwhile, Timberwell, the use of debt is very limited, and this reflected in the company capital structure with an equity multiplier of 1.20%.
For asset management, we're looking at receivables turnover for now. As you can see, MyNews has the highest turnover because they're very efficient at collecting their receivables, and because they're a retail business, so they don't have much outstanding credit. When compared to Timberwell, who has the lowest turnover, this happens because they have a slow collection, which means their customers may be taking longer to pay, and they're also operating in an industry with longer credit terms, such as construction. In the sales and inventory, we can see from the graph, MyNews has the lowest, while Huatai has the highest. But in this term, MyNews is a very fast inventory turnover, while Huatai is a very slow inventory turnover. So for MyNews, their products are sold almost immediately, which reflects their efficient inventory management due to the high sales volume and to the fact that they're also a retail convenience store. So it's very natural for them to always restock the inventory on the shelf. Huatai, on the other hand, it takes about 5 months to sell the inventory, which indicate that they have a low product demand, overstocking in the business. So with such high day sales and inventory, they operate in manufacturing, fruit processing, specialty goods, which means their inventory moves very slowly and their shelf life is much longer. So in this term, MyNews is better than Huatai.
To measure the profitability of the 5 companies, we look at the ROA and the ROE. Starting with the return on assets for the 5 companies in 2024, MyNews came out on top with an ROA of 1.36%, showing it's using its assets really well to make a profit. Huatai also performed solidly at 1.3%. On the other hand, Hupseng and Axiata had much lower returns, 0.23% and just 0.02%, which means their assets aren't being used as effectively. The weakest result from here, we can see it on the bar chart, was from Timberwell with a negative ROA of negative 0.004%, indicating it actually made a loss. So MyNews is clearly the best performer, while Timberwell is the least preferred. Now for the ROE for 2024, Huatai takes the lead with an ROE of 4.63%, showing it earns the most from its shareholders' investment, definitely the strongest performer. MyNews follows with a decent 3.61%, showing average efficiency. In contrast, Hupseng and Axiata had quite low ROEs, 0.35% and 0.063%, which suggests weak returns on their equity. Timberwell had the poorest result with a negative ROE of negative 0.005%, meaning shareholders actually experienced a loss. Now for the ROE for 2024, Huatai takes the lead.
So now let's move on to market value ratio. First is the price earning ratio. This measures how much investors are willing to pay for 1 ringgit of the earnings. In 2024, MyNews recorded a price earning ratio of 39.68, which is the highest among the companies. This indicates that investors have strong confidence in the company's future earnings potential. Huatai also had a high price earning ratio of 30.64, while Hapseng had a moderate ratio of 16.94. Axiata's price earning ratio was extremely low at 0.24, and Timberwell's ratio was negative at negative 1.67, which indicating that the company is currently not profitable. Next is the price sale ratio, which compares a company share price to its revenue. Timberwell had the highest price sale ratio at 2.76, followed by Hapseng at 2.47. Axiata had a ratio of 1.31. So in contrast, MyNews had a very low of price sale ratio, which is 0.43, and Huatai had a slightly lower value of 0.40. A low price sale ratio generally indicates that a stock is undervalued compared to its revenue, which means it could be a good buying opportunity if the company has strong growth potential.
Based on our analysis, our top investment recommendation is Huatai Industry Berhad. Why? Because the company stand out with the highest return on equity at 4.63%, signaling strong profitability. Investor confidence is high as reflected in price earning ratio of 30.64%. Huatai has demonstrated a successful profit turnaround with improving margin that highlight its operational strength. Furthermore, its global footprint in over 60 countries provides significant long-term growth potential. As for other company, MyNews show high growth but its liquidity issues raise concern. Next, Hubseng is financially stable but offers lower, less aggressive growth. Thirdly, Axiata is heavily reliant on debt and currently underperforms in return. And lastly, Timberwell appeared the weakest, facing negative ROE, return on equity, and financially instability. For this reason, Huatai is the most attractive investment choice among the group. After evaluating 5 companies, Water Industry Berhad stand out as the best investment. It shows strong profitability, improved gross profit margin from 22.82% to 29.57%, effective cost control by reducing in administrative and finance expense, and global presence in over 60 countries. Hudson is also a strong performer with high profitability and low debt, supported by efficient operation. On the other hand, Axiata faces challenges with low profitability and high debt, while Timberwell has negative return on equity and must improve its cost structure. MyNews and Hubseng are encouraged to focus on digital innovation for growth. Recommendation in to invest in Water Industry Berhad for its strong financials, brand strength, and global market potential. Thank you for watching our presentation from We Group 7.